Well, hi guys, welcome to this Money Control live stream Tuesday morning. Cues are fairly mixed. Wall Street clocked in a rally last night, but of course, we are seeing Asian markets trading with cuts this morning. Lots of stocks in focus, including the likes of Nykaa, Bajaj Finance, HPCL and the likes. We'll be talking about all those stocks, and we'll also be taking all your stock-related queries. We'll take that up with our technical expert on the show. So if you have any queries, as usual, send them in to us, and we will try and get them addressed. But before we move any further, let's take a look at the top headlines at this hour. Wall Street rally continues with the Nasdaq clocking its 7th straight day of gains. Optimism sustains after the Fed, kept interest rates unchanged last week. Asian markets trade with losses despite a positive handover from Wall Street. The GIFT Nifty is indicating a slightly lower start for the Indian market. Among stocks in focus today, Bajaj Finance launches a QIP to raise 8,800 crore rupees at a floor price of a little over 7,500 rupees a share, which translates into a discount of 4% to its current market price. Also in focus will be Nykaa, post strong show in second quarter, and watch out for earnings from IRCTC, Power Grid and Apollo Tyres. Voting for the first phase of the Chhattisgarh election is underway. 20 of the 90 assembly seats will be voting in this phase. Along with the 20 Chhattisgarh assembly seats, the 40-member Mizoram assembly is also voting. The counting of votes from both the states will take place on the 3rd of December, along with Rajasthan, Madhya Pradesh and Telangana. Well, let me first bring on board our technical expert for today. Joining me today is Sacchitanand Uttekar, who's the Vice President, Research, Derivatives and Technicals at TradeBulls Securities. Good morning, Sacchitanand. Great to have you on the show. We have, seen the rally once again pick up steam as we step into Diwali Muhurat trading. We've seen the Nifty make a dash at that 19,400 mark. But given the fact that the GIFT Nifty is hinting at a muted to negative start, do you think the bulls are set to take a breather today, perhaps, before making a dash at that 19,500 mark?
Good morning, Nandita. Nandita, I think it has been a very impressive run since the beginning of this particular week. We have already seen Nifty again yesterday sustaining above its gap-up opening, and it has managed to register a close above its 20-day exponential moving average after almost 2.5 weeks. So I think if you look at the data set, yes, 19,500. There is a cluster of resistance for this particular week. But if you look at the overall trajectory, we don't see this particular momentum getting stalled here. Probably in a week or so, we may see Nifty scaling towards 19,850 odd levels. So I think the pullback or the resumption of this particular rally has been really strong. Every day we are seeing that the confidence is getting higher. The put writers are shifting their positions higher. So right now, I think 19,300 holds as an immediate base, and for the day we may see a swing towards 19,540 kind of a zone, but eventually we see that particular cluster of resistance also getting breached on the higher side. So there could be a possible breather, but we don't see any form of a short-term correction or any major correction going forward. We may see some pause in momentum before again the rally picks up for an eventual target towards 19,850.
All right, those are the levels to watch out for on the Nifty. An impressive run, after the breather that we saw, after the Nifty hit that 20,000 mark. But hold that thought, Sacchitanand. We'll come back and talk about specific stocks and take up our viewer queries as well with you. Let me also bring on board, Karan Taurani, a senior VP at Elara Capital, joining in this morning to decode, the numbers that have trickled in from some of these new age companies, including the likes of Nykaa and Zomato. Good morning, Karan. Great to have you on the show as usual. Let me start with Nykaa. Yesterday we saw the numbers come in post-market hours, 50% jump in profit. But do you think revenues have got impacted given the fact that we've seen a delayed festive season this time around?
Hi, morning, Nandita. So I think if you look at Nykaa, the numbers are more so in line. If you look at the BPC segment growth, it is somewhere close to 23%. What has happened in the BPC segment over the last 2 years is that competitive intensity has kind of gone up. We have seen, players like Tira coming in the market about 6 to 8 months ago. Prior to that, we've seen other players, like Tata Click and others coming to the market. And now even quick commerce, companies are vouching for this market in a very big way. So with competitive intensity going up, we were expecting that the growth rates will converge from a 30-35% range historically towards a more 20-25% kind of a number on a sustainable basis. So I think the growth rates are largely in line. I think in terms of profitability as well, Nykaa seems to have plateaued out for now in terms of the delta increase in terms of contribution margin or EBITDA margin. If you look at most of the levers like fulfillment cost, marketing expenses, they have come down sharply as a percentage of revenue over the last 6 quarters. The margins, could have been better if we could have seen, better ad spends by D2C brands. But that's more of the, external environment factor which is there. And probably with festive season and other things improving over the next 6 months, if there is traction on advertising, you will see improvement on margin front as well. But the growth rates will remain in this range of 23 to 25% on annualized basis.
Right. When it comes to the stock price, you of course see a target of 200 rupees, on the stock. But going forward, what do you think will be the key factor that could lead to a re-rating or significant re-rating of the stock?
So I think the re-rating trigger of the stock is, we've got about a 35% upside from current price. Now, there are two levers here. I think the bigger delta of 20% upside is the re-rating in the valuation multiple of the BPC business. So if you look at the core BPC business, it is somewhere trading at somewhere close to 56, 57 times FY26 earnings. And I think we do believe that, there is a possibility of this trading at 70 times plus, given the kind of clout Nykaa has. But that will purely depend in terms of, how sustainable this growth of 23-25% is and, how much does the margin improve from here on. So there'll be a consistent re-rating on valuation multiple for the PPC. That's one trigger for the stock. The second trigger in our view for the stock is the fashion business. Now, if you look at the fashion business, it's been a very volatile performance over the last 8 quarters. Sometimes we've seen growth being huge. We've seen big losses as well. But what we've seen this quarter is a big respite from the fashion business because I think contribution margins are at the highest ever, I think, since the quarter when the fashion business launched. They're somewhere close to about 6% odd. So that is a very big respite because they are now trying to focus on profitability also in the fashion business. And that will drive rating for the console entity as a whole, in our opinion. And maybe that, that 10% upside, could potentially come because of the fashion business as well. So 2-3 things that they've corrected in the fashion business. One is they've moved very aggressively towards private labels, which is higher margin in nature. They've kind of reduced marketing expenses. They've also kind of got, other levers to play with, right, fulfillment costs and other things put together. And I think if this momentum in the fashion business is sustained with a growth rate of 25 to 30%, and if they're able to grow contribution margins more towards the range of 10 to 15% and possibly have an EBITDA break even and beyond that, you will see a re-rating basis that as well. So I think profitability in the fashion business, which is, long awaited, but consistency here is a, issue here because you might have just one quarter doing well, but next quarter fashion does not do well, you might again see a re-rating in the stock. So profitability in fashion and a consistent improvement in the growth and the profitability of the BPC business. These are major levers for the stock.
All right. Let me also, talk to you about Zomato, given the fact that, we've seen a second straight quarter of profits for the company and the stock has run up quite a bit, 15% over the last 2 sessions itself. But do you see more room for upside here, or do you think the positives are factored in? We have some brokerages pegging target prices of, as high as 168 rupees on the stock. What's your own view on that?
So I think our target price on Zomato is 150, and we also have a positive stance, on the stock. I think again herein the bigger leg of re-rating is going to come because of Blinkit. If you look at the core food business as such, I think there is no big positive surprise there. In terms of numbers, the growth rates therein is about 20 to 25% on revenue front and 18 to 20% on GOV front. So that's largely factored in, and that these are the kind of numbers that they've been doing in the last 2 to 3 quarters. If you look at the mix of growth rate, that is kind of changed slightly because we are seeing more frequency-led growth right now. We are not seeing customer-led growth because they've also exited some cities and they want to actually focus on repeat user base, something similar to what Nykaa has been doing in terms of increased frequency and increased repeat user. So I think that's the thing on the food business. On profitability angle, again, if you look at the margins, it is currently about 4.6% as a percentage of GOV, EBITDA for the food business. And I think there will be a consistent improvement in line with management guidance of 4 to 5% over the near to medium term. So if you look at the core food business, I think a lot of valuations are already priced in, because of the consistent growth and the profitability that we are seeing. And you can't forget the fact that there's no competitive intensity in the case of Zomato as compared to Nykaa. It's more of a duopoly market today because of Zomato and Swiggy having the largest market share. So that in that way, I think Zomato will get a far higher premium multiple for its food business versus what Nykaa would get for its BPC business. As far as the silver lining is concerned, or the potential re-rating for the stock is concerned, I think that's going to be more led by Blinkit. And Blinkit, as you clearly know, there are 2-3 things here. One is obviously the unit economics of this business are not proven at a large scale. What they are doing right now is that they're trying to focus on top 10, 12 cities, and that's what other players are also doing, like Instamart and if you look at Big Basket, Reliance JioMart is been in and out of this segment. But this is a very big segment, and if at all things continue to do well, and if unit economics moves positive, or if you see probably EBITDA break even or EBITDA profit from this segment, this could be a big trigger, because I think this segment has got a better potential for higher take rates. If you look at the food business, I think the restaurant commission rates are somewhere close to 18-19% today. But in the case of Blinkit, the take rates already are 18%. So I think an improved product mix, wherein you'll have OEM kind of things, you'll have various different kind of products which are higher margin nature, or maybe backward integration is a margin lever. Second big lever for Blinkit is also advertising. So if you look at Zomato food business, therein also there's advertising, but their category is very limited. You've got only one category, which is restaurants, which can give you ad spends. In the case of Blinkit, there are multiple categories, FMCG, PPC, everything put together. So I think there's a potential for far higher ad revenues for Blinkit as compared to what Zomato would generate over the medium to long term basis. So I think basis these two factors, if Blinkit is able to maintain this growth momentum of 40-50% on this base and is able to reduce the losses consistently, you will see a big re-rating delta over there as well.
All right, and lastly, we know that Zomato, of course, is a big beneficiary of the ongoing World Cup, right? But the company has said that it does not really expect a very big uptick in its GOV on a sequential basis, given the fact that, of course, the order value goes up only on certain match days. That's what the company has said. But what is your own outlook on the gross order value going forward for Zomato for the rest of the fiscal?
So I think if you look at the gross order value, on an annualized basis, we were expecting a number of close to 16 to 18%. I think, this number will be slightly revised upwards because the Q2 performance has been over 20% in terms of growth. And Q3, they've indicated that they could potentially grow GOV at 25-30%. Now, what you have to look at here is that typically for World Cup, it's only the India matches which see maximum traction. And the number of India matches are not more than 15 to 20% of the total matches generally in terms of a marquee tournament like World Cup. So that's one. Secondly, most of these World Cup matches are on weekends, which already sees high traffic in terms of delivery orders and volumes for aggregators like Zomato. Thirdly, I think in terms of key beneficiary, it will definitely be Zomato, who will see better growth as compared to a Jubilant or as compared to any other QSR company. Especially in the pizza segment, because back in the day, you had a big delta performance from players like Pizza Hut and Jubilant because they were very, proactive in terms of delivery. Their delivery user experience was far superior as compared to other QSR categories. But in the post-COVID era, I think it's become quite democratic, wherein other categories are also very superior in terms of delivery user experience because of the aggregator. So I think there's an advantage here for the aggregator platform. And potentially, we believe that for that particular month of World Cup, they could see incremental sales of anywhere close to 10 to 15%, which means a quarterly positive impact of 4 to 5%, and which is what they've indicated as well, that their growth rate in the food business could be around 25-30%. So I think that's very much in line, and the delta will be bigger here as compared to other QSR companies.
All right, that's the view then. With that, we are running out of time. Karan, thanks a lot for taking out time and sharing your thoughts with us. Look forward to having a longer conversation with you sometime soon.
Thank you.
Well, with that, let me go back to Sacchitanand and talk about specific stocks. Stock of the day today should be Bajaj Finance, given the fact that it has launched its QIP to raise 8,800 crore rupees. That's as per sources. Of course, indicative floor price could be around 7,250 rupees per share, which translates into a discount of 4% to current market price. Of course, as per SEBI, the floor price for QIP, as per SEBI formula rather, the floor price of the QIP comes in at 7,533 rupees per share. But Sacchitanand, given the fact that the stock price is stuck in a range over the last 1 month, it has lost some steam. shed somewhere around 6% or thereabouts, despite a strong show in the second quarter earnings. Going forward, what kind of a level would you be watching out for on a Bajaj Finance? Do you think it has the potential to reclaim 8,000 anytime soon?
Well, certainly yes. In fact, if you look at the monthly structure, though we have seen a bit of a correction here from the levels of around 8,200. But if you look at, the monthly 5-month exponential moving average, it has always supported the price. And we have again seen, the stock consolidating and forming a base somewhere close to around 74.50. That is the cluster of supports, which have been revisited again. And the kind of data that we are seeing, we are of the opinion that eventually we may see a very good strong rally in this particular counter. From an immediate perspective, I think a breach above 7,700 is necessary. It has been oscillating within this particular range of 74.80 on the lower side and 76.80 on the higher side. So the moment we see a confident breakout above 7,700, I think the rally towards 8,000 may happen very quickly. So definitely, it is at a very good support-based level, wherein the stock can be considered even as a portfolio addition. From a momentum perspective, a breach above 7,700 will unlock a very strong directional momentum flow for a preferred target of around 8,025, 8,030. Stop losses should be placed at around 74.60 on a closing basis.
All right, 74.60, of course, key level to watch out for on Bajaj Finance. But before I take up some viewer queries, let me ask you about HPCL. Of course, numbers came out yesterday. They have beaten estimates, even though profits have fallen 17.5%. The fall has been lesser than expected, and average GRMs in the quarter gone by have come in at $13.3 dollars per barrel, was vis-a-vis $8.4 per barrel last year. Going by the fact that HPCL as a stock hasn't done all that poorly, in fact, over the last 1 month, the stock has gained over 4%. Of course, there are concerns over squeeze in marketing margins amid the volatility in crude prices. But if you look at the PSU oil basket, do you think HPCL is one stock that is best poised compared to a BPCL and IOC?
Well, if you look at if you compare all the three counters, I think IOC is far better right now. In fact, it has the rally from the base at around 86, 87 has been very strong in the last 2 weeks. And purely going by the momentum trend, HPCL does have a lot of cluster resistance around, 260, 265 kind of a zone. So until unless we don't see a confident breakout on a weekly closing basis about this particular cluster, I think I would rather give it a pass. Talking about momentum, I think IOC is still better placed. We have evidence of a higher base getting formed somewhere close to around 96 levels. This is the level wherein stop losses can be traded, and even on a decline or a consolidation, the counter can be accumulated. Overall, the structure is indicating a price target somewhere close to around 114 in the long run. So I think it's better to accumulate IOC on every decline, keeping a stop loss somewhere close to around 94 levels.
All right, that's the view on the OMC basket. Of course, IOC looking far better than HPCL at the current juncture. But let's take up some viewer queries that are trickling in this morning. Sacchitanand, the first one is coming in on JP Power. In fact, we have a couple of queries, on the same stock from Sharwan Bhatti, and Sai Prasad also wants to know your thoughts on this particular stock. We've seen a very stupendous rally coming in on this stock. Yesterday, it was up somewhere around 9%. Over the last 5 sessions itself, stock has jumped nearly 30%. Should one chase this momentum and buy into it at the current juncture, or do you think it has run up quite a bit already?
Well, the structure is getting better, especially on the longer term scales. It managed to sustain above that 11, 10.5 cluster. And on the weekly and monthly basis, the price pattern is indicating a further extension towards 15.5 levels. So I think it's better to chase momentum here, keeping a stop loss somewhere close around 10.30.
All right, that's the view. Of course, chart structure getting better on JP Power. But with that, let's also take up a query on Aarti Industries. Sai Kumari wants to know your thoughts on this. I think it was, the top Nifty 500 gainer yesterday. What are your thoughts on this stock? Do you think this rally will sustain?
Well, I think most of the chemical counters are displaying a very similar price action, and overall, if you look at all the formations, they are indicating a kind of a breakout from a falling wedge formation. Now, falling wedge in a declining trend is usually considered as a bottoming out process. So I think in the near term we may not see Aarti again slipping below that 450 mark from where the moment was picked up. Yesterday, we saw it confidently trending above that 500 zone, and now it is attempting, to clear that 200-day exponential moving average resistance, which is placed somewhere close to around 520. So I think for the day, this could be a hurdle, but eventually we see this particular level getting breached. And from a pattern perspective, we may see this particular rally getting continued towards 560 in the near term. So I think the stock can be accumulated in one's portfolio. The stop loss from here on a weekly closing basis should be maintained at around 465.
All right, 465 crucial level to watch out for on Aarti Industries. Hope that answers your query. But we have a query coming in on Vun Beverages from Naveen. I want to ask you, the stock, of course, has been pegged to be a major beneficiary of the ongoing World Cup as well. But post its second quarter earnings, the stock, traded pretty much flat yesterday, ended in the red. Going forward, it's actually very close to its 52-week highs as well. Do you think it would continue its run and perhaps hit a fresh high of 1,000 rupee mark sometime soon?
Well, the stock is locked into a very secular bull run, and it gives you near-term declines. Structurally, there may not be any major change unless we don't see this particular stock, slipping below 840 mark from here on. So I think there's a good scope and possibility that the stock could see a further run up towards 1100 levels as well. But in the near term, on an immediate basis, we have seen some supply pressure at around 690, 670, 665 kind of a zone. So probably we may see it slipping towards 900, but I think that will again be a good opportunity to accumulate the counter. Unless we don't see a closing below 840 levels on a weekly basis, the height of higher bottom sequence or the bullish sequence may not be terminated, and we may see it eventually scaling towards 1050, 1100 kind of a mark.
All right, that's the view on Vun Beverages. Very quickly, couple of more queries that I want to squeeze in. One is coming in on public sector banks. Of course, we have a few queries coming in on this space. One from Ashok Kandukuri and one from Mayank Vyas. He wants to know your thoughts on the likes of Canara Bank, SBI, and Bank of Baroda. All these counters, do you think do you think they warrant a look at the current juncture? And if one is holding on to these stocks, should one book some profits, or how should one trade into the PSU Bank space right now?
So yesterday we saw some disappointing move by SBI, but if you look at the structure, it is still very confident after a good strong rally. For the last 2 weeks, we have seen some pause in momentum, but the higher top higher bottom sequence is well intact. We have a good evidence of a immediate support somewhere close to around 570 zone. So even if we see further slippages there, the stock can be accumulated even from a portfolio perspective. 540 is the level below which the major structure may change. But we see, this particular move getting, extended towards 610 eventually. And I think every pause or any decline in this particular counter should be utilized to add on to long positions. When we look at Canara Bank, it has been very confidently trending above its 20 and 5-month exponential moving average and the 20 weeks exponential moving average. Even here, we don't see any signs of exhaustion. There is, some area of resistance in the near term around 400 levels, wherein the writing has been very evident. But eventually, we see this particular stock, scaling towards 465, 470 zone. And that's why we keep on recommending this particular stock to our clients. Even right now, on an immediate basis, I think 345 is an ideal base wherein stop losses can be traded. And in case if we see any declines towards 365, 370 zone, I think it will again give us a good opportunity to create fresh aggressive longs.
Well, hope that answers all your queries. But one last query. This one is coming in from Satya CK. Wants to know whether or not if this is the right time to buy into a VA Tech Wabag. Stock has been doing fairly well, but yesterday it took a breather. Do you think investors should utilize these breathers to perhaps buy into this one?
Well, even here, it has been locked into a very strong bull run. The support is placed somewhere close around 460 zone. So unless we don't see it, closing on a weekly basis below that particular support, the trajectory would be, to accumulate the counter on every decline. On the higher side, the moment we see a confident close above 540 zone, we may see an extended move towards 620, 625 levels. So I think it's a good time wherein declines should be utilized to create some more long positions, keeping a stop loss somewhere close to around 450 on a closing basis.
All right, that's view on VA Tech Wabag. Hope that answers your query. With that, we've come to the end of this query segment. But Sacchitanand, before I let you go, what are you recommending for viewers this morning?
3 stock ideas, all on the long side. We are expecting that markets would eventually break that 19,500 cluster and move towards 19,850. So all these stocks are, from a positional perspective. Axis Bank is the first counter which has breached and broken above its declining channel formation. If you look at the placement of its RSI, it is now confidently trending above that 50 mark. We're expecting this particular rally to continue towards 1,050 levels, and that's why I'm recommending the long positions here with a stop loss at 994. The second counter, which is forming a base, is TCS. Probably we may see it, ejecting from that particular consolidation today. On the 60-minute scale, there's a classic triangular formation. It has been making attempts to clear that 200-day exponential moving average resistance at around 3390. We may see it, eventually getting or establishing a close today. We're expecting this particular move to extend towards 3485 on a positional basis, and that's why we are recommending building long positions here. 3375 should be the stop loss. And the final one is Pyramid Enterprises. Yesterday we saw it, challenging its call writing zone at around 1000 levels. It has managed to sustain above that 20-day exponential moving average. And if you look at its RSI, it is placed somewhere close to around 49. So the moment we see this particular level of around 1000, 1010 getting sustained, we may see a good strong breakout on its RSI, which could eventually fuel this momentum. We are expecting this move to extend towards 1055, and that's why we're recommending building long positions here. The stop loss at 992.
All right, those were all the stock recommendations coming in from Sacchitanand this morning. With that, Sacchitanand, thanks a lot for joining in and sharing your thoughts as well as answering all of your queries so patiently. It's always a pleasure chatting with you.
Thank you, Nandita.
Well, with that, before I end the show, I want to remind our viewers we have, things heating up in the primary markets. Of course, we will be having Mamaearth listing on the bourses today. In fact, final issue price was fixed at 324 rupees per share. If you go by the, grey market signals, it is expected to see flat to marginally positive listing. It has raised somewhere around 1,700 crore rupees via the IPO. And in fact, it's a money control exclusive. Zomato's Dipinder Goyal has got, allotment in this IPO. So watch out for the listing at 10 a.m. And of course, you can, log on to our website to see what analysts are expecting from this new listing today. But with that, we are completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. From me and the entire team, I wish you a very happy trading day. But of course, stay tuned because coming up next is Opening Bell.